Clearance rate across the country was 73.6%. That's according to CoreLogic. There was about 1,800 properties auctioned across Australia's capital cities, so pretty good result for auctions, really. It's still, the amount of stock on the market is still low when compared to last year. There was about 2,600 homes auctioned the same weekend a year ago. But the clearance rate is getting better and stock levels are slowly rising. So stock this week was slightly higher than the week before. There was about 60 more homes auctioned over this recent weekend. Melbourne had a pretty good result, about 630 homes auctioned. Clearance rate in Melbourne was about 77%. And Sydney, there was about 800 homes auctioned. Clearance rate in Sydney was a little bit higher, around the 77.5% mark. But the stock is slowly getting better, Laura, week to week, and the clearance rate seems to be picking up a little bit as we head into the holiday season.
OK, some good news there. The RBA Deputy Governor is speaking tomorrow, I think it is. What's he expected to say?
So the speech is titled Monetary Policy in 2020. So Guy Debelle, the Deputy Governor of the Reserve Bank, he's basically we're expecting him to recap the year that was 2020. So just as an example, in March, the cash rate, we started the year at 0.75% and it was cut at the start of March to 0.5%. And then they held an emergency board meeting in March and cut it to 0.25% and kicked off quantitative easing. And they bought about $63 billion worth of government bonds between March and October. And then just a couple of weeks ago at the start of November, they cut the cash rate again to 0.1%. And it looks like it's going to stay that way now for at least 3 years. The Reserve Bank's governor, Philip Lowe, just a couple of weeks ago said they're not going to be interested in raising the cash rate at all until inflation gets between 2 and 3% per annum. It's currently at 0.7%. So we're expecting him to just talk through the year that was and throw forward to next year, where they're going to be monitoring their new quantitative easing program. So they've pledged to buy about $100 billion worth of government bonds, and they've said they're going to be closely monitoring that, the impact that has on the economy over the next few months.
OK, it's going to be a long road. Now, this week we get the last economic data ahead of the September quarter GDP numbers. That's on December 2. What are economists predicting for the third quarter?
Yeah, this week we get some construction figures and we also get some private capex figures. That is really the last chunk of data for the 3 months to September. This also comes after the really good unemployment numbers we got last week, where it showed about 180,000 jobs were created during the month of October, which shows the economy is getting back on track. Those unemployment figures obviously won't be in the Q3, the September quarter numbers, but Commonwealth Bank economists believe our economy is going to grow in the September quarter. They think it's going to lift itself out of recession and grow by about 2%, which is a good thing.
It certainly is. And finally, perhaps we will end on a positive note here as well. What's the local stock market expected to do when it opens today?
Expected to rise by about 0.5%. We had a bit of a weak lead-in from Wall Street. Tech stocks over there on Friday, their time, Saturday, our time, were pretty weak, so our tech sector could be one of the softer performers today. Energy stocks could do well. The oil price went up 2% over the weekend, and along with mining sector as well, because the iron ore price has climbed again. It's almost at $130 US a tonne, so our miners could do pretty well today too.